What's up everybody, welcome back to the channel, Earn It, Save It, Invest It. This is my week 13 of my 100K challenge or my road to $100,000. So I'm gonna break down what I did this week, how I've performed, what I think is gonna happen into the market. And I kind of did actually a few weeks ago predict exactly what happened to the market, and I have some feelings about what's gonna transpire over the next 2 months. So yeah, this is my 100K challenge breakdown, week 13. Please give a like and subscribe if you like this. If you are a regular subscriber, regular watcher, all that, I really appreciate you. But let's get right into it. So as you can see, I'm at $8,557.38 at week 13. I was down 1% on Friday. The week performances on HIMS, again, is my biggest my biggest weighted stock right now, but Celsius is catching up. TQQQ are catching up. They're not only just catching up, HIMS is also lowering itself down, right? Because of the stock price. But HIMS, still my largest weighted stock and my largest weighted position, minus 5%. So that didn't do well, but Celsius was up 2%. The other major ones that I have, the TQQ, Nike, and Meta, all down 1%, 2%, and Fubo and Amazon, right? So wasn't a great time, wasn't a great week for me, but that's all right. I predicted this. So this week, I've been down $121 just from the investments. That's not including the $50 I deposited every week. So I was at $8,628.82. I added $50, but then I lost $121.43, and now I'm at $8,557.39, right? I'm down minus 1.4% for the week. Compared to the indexes, again, I am the worst. I sometimes will be on an extreme side of the indexes. If they're not performing too well, then I kind of go towards the negative. If they are performing really well, then I might be performing really well. Does matter what HIMS is doing mostly, but that's what it kind of seems to be. So for me, my account's gone down negative 1.14, while the other indexes have gone up. Essentially, the S&P down was less than 0.1%, and the Dow Jones was down 0.1%. So, again, NASDAQ up the biggest, 0.9, and the Russell 2000, which is actually surprisingly continuing to beat the S&P right now, it's up 0.2%. So I'm trailing the indexes. Since I started this whole challenge, I'm up $553.19 since June 2nd. Again, this is not including my contributions. I've contributed $650 towards this account because I started at $7,354, added $650. I've had $553 of total investment gains, and so that brings me to my current balance. Since I started, I'm at 7.4%, which is the weakest out of all the indexes. Now again, I'm going to keep putting this out there. I already knew this was going to be a challenge in that regard of like HIMS it was so heavily weighted, and it was already such a heavy gainer. It was already at almost 300%. So I already knew that HIMS had a chance of going down a little bit in the short term, being very volatile. So I'm still only in the first, 3 months of this. So it's nothing crazy, but I am underperforming all the other indexes, right? Russell 2000 is beating everybody. This is one thing that kind of is a little bit murky to me, is that the Russell 2000 is beating everybody after all these years of being, the down dog. S&P is up 9%, NASDAQ up 13%, Dow Jones up 8%. So, and this is all from June 2nd. So the Russell 2000 is doing great. I'm up 7.42%. That's great, but I want again, I have to be up about basically 20% each year. So I'm on my way there. But again, look at the markets. The markets are doing great. So if the markets take a turn down, I'm probably going to take a turn down, right? So week 13, my goal, right? If I want to make the $100,000 in the 520 weeks, yes, it's a long time, right? I plan to make it before that. But mathematically, if I want to get there in 520 weeks, I should be having $8,360.83 in my account, which I'm obviously beating that. And that is after having 1, 2, 3, 4 down days, right? We have, or weeks, right? I was at 8,880, right? 8,800. That was my peak at week 9. And then I just continued to kind of go from there. So again, HIMS has been performing bad over the last month, but if I have to start reallocating some of my positions, sell some and start repositioning some stuff, then I might have to. But as of now, I'm just going to keep adding to my positions. Speaking of adding to my positions, I didn't add any to my positions this last week. It was a down week, and I actually should have taken more advantage. I kind of wanted to buy Fubo on Friday. Had a busy personal week. Again, everyone does, right? And this is all of our excuses of not doing some things. But I'm also a little hesitant of this market right now, so I'm like, you know what? Just let me load up on a little bit of cash. I'm just going to load up on a little bit of cash. I have $8,500 in my account, and I only have $300 cash. That's not that big of a portion of cash to have. So I'm like, you know what? Just let me, I want to have a little bit of cash in case what I think might happen happens. So the QQQ, it really tracks the NASDAQ, right? And I've been talking about the QQQ for the last month now. I mean, I talk about it basically every week, but I did last month. It was actually like 4 weeks ago. I said, be careful of the QQQ because you could see in August, 60%, right? The odds are still in our favor to come up and be positive, right? And positive. Now, it says we're up 2.4% in July, and that was even after a pretty major correction, not a major correction, but we had a swift little, corrections almost, it was about like 4% or something at the very end of July. So August had a really good starting position, right? It was already starting from being down, right? July had already taken it down a little bit, so August was going to push up. So I said, all right, look, August might, again, historically in the last 10 years, 6 out of 10 times, it's gone up. So I said, well, August, is probably going to end up around, the 570, somewhere around there, that mark, and then I'm going to be really hesitant for September and October, especially with the Fed coming out with their stuff, with all this, the Fed coming out with their decision to most likely lower rates, but the Donald Trump, firing people and them, the government having their hands and stuff into the Fed, it might start getting very headline-ish, where, oh, Trump and the Fed and this and that and all these things are start mixing up together, along with bad seasonality. Maybe we get some more results, more, stats about tariffs having a bigger effect than we thought, all these things. Now, everything's up in the air, right? Anything can happen, but I'm just personally going to be a little bit hesitant in September. I have a feeling we're going to just have a rough ride. And if we don't have a rough ride on September, if it becomes smooth sailing, not in the sense of, oh, we have to make big gains or anything, but if we just end up notching very little positive or little, if we're just at all in the positive or even just a little bit negative, I do believe that October is going to have a very rough month. But I think September might be able to take the brunt of it. And then October, maybe the first beginnings of October, like the first week or two, it can still is kind of feeling some of the volatility. And then we start boosting back into the holiday season. And, as you can see, November, we go from September 30%, October 50, November 90. So I do think that there's going to be a transition phase of going from the September, we're going to have some kind of correction. We're going to have headline news. We're going to have all this and that, fear, right? And actually, let's kind of go over the fear and greed index really quick. Okay, so here's the fear and greed index. Now, as you can see, we actually bumped up from a week ago. We were at 61, and now we're at 64. A month ago, we were at 70. So, in the previous close, we're at 66. So we've gone down. It's been up and down a little bit. A year ago, we're at 56. So far, we're all in the greed territory from all these previous, the quick summary timelines, right? If we look back. But I do feel like eventually we're going to push this needle over to fear again. We hit extreme greed. We either hit it or we're very close to it just a little while ago. And yeah, see, 1 month ago, greed was at 70, right? We're notching up closer and closer to extreme greed. I do think fear is going to come back into the market and do something for September. I think this needle is going to change into fear at some point. It doesn't even have to be in like extreme fear or at the low end of fear. I just think it'll at least go into the neutral, because we were in neutral just a little while ago. Neutral or kind of like the top 50% of fear, right? So we'll be hitting like the 35 to 50 zone. That's where I think we'll end up in September. And for the AAII sentiment, right, you can see that the bulls have actually increased 4%, which is pretty crazy. The bears have decreased 5%. So, okay, people are feeling better about the market, right? And neutral actually went up, right? Neutral went up. So the bears just gave up 5%, and the bulls took up a couple of that, and the neutral took up a couple of that. So people are feeling a little bit more bullish in terms of the, American investor, right? But again, it takes one headline. It takes one headline to change everyone's feelings, and that's what you have to understand. The stock market is so emotional. It's so emotional. In an instant, all of a sudden, everyone starts selling everything, and everyone's panicking. That's what happens. So you just have to be very conscious of that. So like I said earlier, I did predict this a few weeks ago, and I'm actually going to play the clip right now of what I said, because I just had a feeling that the market was going to end up exactly where it is. And then we're going to have a little bit of bump. October could provide a boost, but I think August is going to provide a little bit of a boost here, but then we're going to kind of just bounce around the 560s, somewhere around there. We're going to get up there eventually and then move up to 570 by the end of this month or into September. That's just my opinion, of course. And just like that, we are at 570. We are at 570 and 40 cents for the QQQs, right? The Qs. It's exactly what I thought was going to happen. I knew we were going to have a boost up, right? We just had like I said, it wasn't a big crash. Let's look at this little correction that we had right here. Let's look at this correction. Remember I said it was about 4% or so. It was about 3.5%. From top all the way to the very, very bottom, it was about, 4%, but it ended up closing 3.5%, right, after the few days. I knew that was going to recover. We weren't just going to stick to, a downtrend. But I also knew that going up like this was not at all going to stick. We weren't going to go back up exactly past where we were. But I knew we'd come out to about break even from about that range, right? Which I was saying about 570. And we ended up at 570. So what I think is going to happen is, here, let's go to the end of September, right? We're right here. I think we're going to end up somewhere in this range. I just think that we aren't really going to go anywhere. And if we do, we go down. I think we'll go down maybe 2%, something like that. We could even go down 3%. I do think that this could be a very scary month. I'm actually going to drag this down. That's what I think is going to happen in September. I'm going to mark this. I'm going to keep it there. Let me see. Is that about 3%? Yeah, 3.5%. That's fine. I think this is the range we're going to end up in at the end of September. From there, I'll see. If we end up on this top end of range, I feel like we're going to have a bad October. If we end up on the bottom range of this, then I think we'll have a decent October. Maybe a great October. I just think it will be a decent October, and then we'll boost into November and December. Again, there's so much news. There's so many different things that can happen with Trump and the government, whatever, just dealing with the Fed and all these, there's just so much stuff that happened. And if you don't remember Trump's first term, headlines and news and all that, the volatility was insane. He used to tweet something out and it would crash the market or boost the market from a single tweet of saying, oh, this is what I think should happen, or this is my opinion on this. He just, a little while ago, I think it was a week or two ago, he was talking about how they want to reclassify marijuana. Right away, right? All of a sudden, all the weed stocks went up. Nothing happened. He didn't actually reclassify anything. He just said it. And it's crazy on how the market gets when you tell it something, right? But as you can see, we are on this clear uptrend still. We're on this clear uptrend, and as I was speaking about before, we have these triangles of corrections, right? These are all 10% or more corrections. Now, when are we going to have that 10% drop again, right? Here, in between those triangles was 83 days. Before that was 175 days. But that was right after coming off of our top, right after the big 2022, right? But before that, 167, then we have 60, 79, 132. So you could say we're around like the 80 to 120 mark, somewhere around there, right? That's about an average amount of days that we get before we start hitting like, okay, hold on, we're going to hit a wall. We're at 65, right? So we could end up, boom, like having like, all the way up to about here, like I said, 80, and then having a big crash. We could end up having a crash, and then October comes around, we have like a little bit of a crash. And that's very possible. We're starting to reach the average amount of days in between 10% corrections. It's just simple math. In between 10% or more corrections, the average is about 80 to 110 days or so, right? And I'll break down the actual number. I'll put it on the screen, the exact average amount of days. It's over the last, I'll do since, this was a huge one, right? We had 444 days. So that was, I'll do 2018, right? This was Trump's first presidency, essentially, right? So I'll go over the next 1, 2, 3, 4, 5, 6, 7. I'll do the last 7. And I'll see what the last average was. And I'm telling you, we're getting closer and closer. And the average is probably going to hit September or October. So I just think that we need to watch out. We need to watch out for one of these triangles to appear again, because it's going to happen. It's going to happen. When is it going to happen? I don't know. I'm not trying to tell anybody to fear the market. Oh my God, we're going to go into a big crash or a recession or anything like that. Eventually we will crash. Eventually we'll go into a recession. Eventually we'll go back into a bubble. Eventually we'll go back into a boom cycle and a bear cycle and a bull cycle. All this stuff. It's fine. It's going to happen. I try to tell my kids this all the time. Don't be scared. Be prepared. Okay? Don't be scared of something, especially if you know it's going to happen, right? If you know something's going to happen, being scared of it does nothing. Nothing. You want to be prepared for when this thing does happen. You're not scared. So like, I'm preparing. I'm stocking up a little bit more cash now, right? We're coming to that spot. I feel like the market's going to have, like I said, some weak spots, some headlines. I just think something's going to happen here. It doesn't mean I'm not invested. It doesn't mean I'm selling, right? It just means I'm maybe reeling back how much I want to put in, but I'm preparing mentally and financially, right? Positionally, right? Share-wise, like I am preparing. And so when it happens, I'll be prepared. When it happens, I won't be scared. I don't want to say I will welcome a crash or a correction, but I will be more welcoming of a crash and correction than most because I will be prepared. And if everyone else was just as prepared, they would be like, cool, awesome. I'm going to get some discounts. I'm going to buy some of this. I'm going to buy some of that. And in a year or two, I'll be fine. But that's not what happens. The stock market is very emotional. People are very emotional. And the stock market is, there is a lot of machine algorithm stuff going on now, right? But there's a lot of human traders. There's a lot of human emotion, a lot of human emotional factor that goes into the stocks. So again, just be on the lookout, be prepared, don't be scared. I do believe September is going to be a rough one. At least the next, I would say, 45 to 60 days, right? It's the next month and a half to 2 months. I believe it's going to be a little blotchy, possibly taking a dip down. We hit a new time high, right? We could end up, but when you look back at this one, I don't even think we almost hit the all-time high before we actually went down. We basically did, right? We hit that high and then we ended up crashing, right? It seems like you're always going to hit an all-time high before you actually end up crashing. So that's also a little bit I'm like, well, look, September could end up bouncing 2% at some point. 2%. September could go up 2% from the Fed or this and that, and then something happens and we dip down like this. You know, something might happen where we jump up and we're like, oh, good, we're feeling good, right? We're feeling greedy, And then all of a sudden we get fearful, and then we pass through, right? Exactly where I would put it, you know. And like I said, if we go by the top end of this purple, if we're the top end of the end of September, it's going to be a hard October. The October is going to be a lot harder, in my opinion. This is all opinion. So again, be prepared. Don't be scared. Give me your comments. Give me your thoughts and opinions. I'm just out here trying to make smart investments, expressing my own thoughts and all that stuff. And yeah, let me know what you think. Thank you all. If you're even at this point, I bet you most of you aren't, and whoever is, I appreciate you. I honestly do. Thank you so much. And please, I'm sure if you are watching, you're already liking and subscribing to my stuff. But if you didn't like, please hit the thumbs up. I appreciate it. Tell anybody you know to subscribe. And yeah, never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.